As we just mentioned, Federal Reserve policymakers began their two-day meeting today with a decision on interest rates due tomorrow. And although the well-known bond fund manager Bill Gross says the probability of a rate hike tomorrow is better than the market expects, most on Wall Street disagree. Steve Liesman has the results of a new CNBC Fed survey.
Markets going into tomorrow's meeting and the rest of the year with pretty good certainty about how things shake out from the Federal Reserve. 90% of our 41 respondents say the Fed will not hike rates tomorrow. That's up from 80% in the August survey. You can see in August, 21%, a fifth, were flirting with the idea maybe the Fed would hike at the meeting tomorrow. Just 7% say that now. Why does the Fed stay on hold? Take a look here. 31% say it's because of global growth concerns. 22% say it's because the market's not ready for it because they're pricing it out. 11% say the presidential election, and 11% say inconsistent or weak job growth. How about the rest of the year? Pretty good unanimity here, or at least consensus. 88% believing the next rate hike comes in December. That's up from just below 70% in the August survey, and a few others picking a few other months for that next rate hike. We also asked about the Dove Hawk Index, where different people stand. The most dovish Fed Governor, Lael Brainerd, on a scale of 0 to 10, she's just 1.8. The Fed Chair, Janet Yellen, 3.2. All the governors are 3.8. More dovish, you can see here, than the president's at 5.3. There's the average, a touch more hawkish than it was when we last asked in April. And then all the presidents, 5.3. Stan Fisher, the Fed Vice Chair, a big gap between Stan Fisher and the Fed Chair, Janet Yellen. And here's our most hawkish Fed president, Kansas City Fed President Esther George. She is at 8.4. Back to you guys.